Good morning, David Coombe here with the CBS AM Debrief. It's Thursday the 10th of November, and overnight we've seen one of the bigger moves down in recent sessions. Of course, this is all about Italy, and the bond yields there are trading up above 7%, which is in fact actually the level that forced Ireland and Portugal to seek bailout remedies there going back last year. The government debt to GDP ratio for Italy has always been around 120% or greater, whereas those other two economies gradually built their debt levels up over time. So in Italy, the government debt is sort of far more structurally entrenched. So that's certainly a concern there, and the markets certainly felt that was the case. So we're just coming up on close here. We're about 3 minutes before the close of the US session. Let's have a quick look at those numbers. The Dow down 3.27%, the S&P 500 down 3.75%, and Nasdaq down nearly 4%. The DAX down 2.21%, FTSE 1.92%, and the Euro top 50 down 2.34%. Let's have a look at the futures here and see what they're suggesting a bit closer to home. Okay, so we're tipped to come off here 113 points. That's quite a thumping, and so once again that 4,400 level is proven to not want to be taken out. The rest of the region, Nikkei down 100, and Hang Seng up here 138 now. I think that, yeah, not sure about that number. In other news, the Iranian nuclear activity report from the IAEA has come back and suggested that they're hard at it, and that we're seeing a case of absolute political lying going on, would be a better way of putting that. But the sanctions that are likely to follow will be severe, and this should certainly put crude very well supported, and really isn't what we need at the moment with the global situation elsewhere not being helped at all by that very high cost input effect there from gold. So as a consequence of all this, also we saw the US dollar very well bid, and gold fell off as a consequence. Let's go and have a look at those commodities now. Just move down and maybe move from top to bottom here. Gold here down $31 to $17.68. So 1600 is really proving to be pretty tough resistance, and it seems like it's going to have to really have some very, very good reasons, other than the obvious ones, to really punch above 1800. So a lot of work to be done there, it seems, for gold to breach 1800 at this point. And so coming off there largely on the back of this US dollar strength. We'll move up there. Silver down 3.54%. So quite a big move there, back down under $34. Copper at $3.39.5 per pound. That was down nearly as much as, still a bit more than silver, nearly 4%. Pretty much red right across the rest of the soft commodities here. In fact, the only thing I can see that made some slight gains was coffee at 0.26% up. Everything else in the red. I won't go through them individually, but looks like a bigger move there was wheat at 3.37, and cocoa at 3.20 to the downside, rough rice 2.67, and just seeing anything else that stands out there, no, but all red there. And then we did actually see crude come up 64 cents. So we don't actually know the nature of those Iranian sanctions at this point, and they will play out, although Israel is saber rattling that they want to conduct a strike, preemptive strike. At this stage, they're they're really just making those noises rather than that likely to be an immediate effect there. I think is fair to assume. Okay, move on to the currency pairs now. As mentioned, the US dollar strength here, so everything getting mashed down. Particularly the Aussie here, we've lost 2.5 cents here just overnight, down at 1.1.5, and US dollar yen at 77.8420. The pound buying 1.5924, and the euro buying 1.3547, and the US dollar buying 90 Swiss francs. So we've actually seen a bit of a move there in Swiss strength. Okay, let's have a look at the economic calendar here for today, Thursday, November the 10th. We have employment numbers out locally. That's expected. Employment's expected to grow a little bit, 0.1% to 5.3 from 4.2 previous. We're expecting to put on about 10,000 new jobs. That data's out at 11:30. So expect a number there a weaker number there perhaps to see the Aussie get sold off a bit. Moving down to the mid to late afternoon, we've got some Japanese data out, consumer confidence and machine tool orders. And then we've got some Eurozone publishes their monthly report for November and releasing economic growth forecasts. So that could further bury the situation there if we get a number that's unexpected and not so nice. We've also got a little bit of German CPI numbers out at 6 o'clock East Coast time this afternoon. That takes us into tomorrow, where the main data there will be the University of Michigan confidence numbers, and that's about it. So that finishes up the session for today. So hold on to your hats, fasten your seatbelts. We knew this European situation wasn't going to go away, and in fact, I can say here that it was actually Jono that was talking about Italy being the next cab off the rank as far as the Euro opera, tragic opera that's playing out here in the markets. I think that was a good 2 months ago. So pays to pay attention. You heard it here first, perhaps. We'll see. We'll leave it at that. Wind up. Thanks as always. Bye for now.